I'm on the trading floor of the New York Stock Exchange with Sandra Navidi of BeyondGlobal. Sandra, thank you for being with us.
Thank you. Happy to be here, Dan.
Sandra, now that the Fed is tapering steadily, will this be a threat to emerging markets?
Yes, we've already seen that it has created a lot of volatility. First, the Federal Reserve has created a lot of excess liquidity and driven investors into emerging markets in search for yield and returns. And now investors feel that emerging markets have become too risky, and many of those institutional investors are not even allowed to hold investments with such a high risk profile, and they're pulling their money. And as they're pulling their money, the markets are getting distorted and creates a lot of volatility, these cross-border outflows.
Is it the Fed's responsibility to be concerned with emerging markets?
No, the Fed is really only obligated to the United States. However, it has to be noted that at the height of the crisis, the developed countries have asked the emerging countries to coordinate with them and cooperate, which they have done. And now the emerging markets are in trouble, and they're asking for the developed countries to help them. And so far, it doesn't seem like the U.S. is willing to do that. The U.S. says, or Yellen has said, that the problems of the emerging countries so far have not affected the U.S. economy.
What could potentially solve this problem?
Well, I think increased cooperation might help, even though it's very complicated and it's not certain that it would really work. But central bank governors meet once a month, and so they could discuss and try to create some measures. But I think all the emerging markets are very different from each other, and so with many of them, it's not just the Fed policy that is creating these disruptions in their markets, but really is also fundamental economic problems. They've had it easy in the past through this excess liquidity and have neglected employing structural reforms and changing their policy measures and making their political system a little more sound, like in Russia, for instance, or Argentina, Turkey right now. So it's also political. It's an economic problem in their country and also a political problem.
Can you tell us a little bit about what other threats the tapering represents for the U.S. economy?
I think the greatest worry is a destabilization of financial markets, and the longer that the Fed policy, like interest rates are so low, the greater the worry that inflation may come to pass at some point. But Yellen has said that the recovery has not been strong enough to raise interest rates just yet. One could argue that the low interest rates also, to some extent, convey a not so optimistic point of view on their part.
Thank you very much for your time.
You're welcome, Dan. Thank you.